Okay, so this is one more prohibited area for students, that is foreign exchange. Quite a complex chapter for many students. If you don't learn properly, you also may be in the same situation. And this has got a lot of applications again in your FR also, so that will also show up there. But this chapter is quite tricky in the nature. It takes less time to solve in problem. Like 8 marks you can solve in 5 minutes. But what to solve itself many people will struggle. And as I keep telling, there's no fun in doing what everybody does. So if you want to reach to a different level, you should do that what others cannot afford to do. So foreign exchange management, if learned properly, again can be one of your favorite chapter, but it has to be learned in a proper manner. To start off with the small PJ, having X life is problematic, but here in this chapter we have Forex. Anyway, as I told you, it is just a PJ, just to start on a lighter note. Okay. Basics of exchange. Originally when the economic transactions developed so many years back, it was called as barter system, where a product is exchanged for a product or service. Imagine if barter system were to be there today, how let's say our classes would have become. Let's say we had a face-to-face class. You come to sit in the class, I come and I teach. After the class is over, you don't have to pay money. So what you would have done, you will be like, sir, today I have my breakfast, have it. Or today I have got some fruits, you have it. Today I've got some biscuits, have it. Or after the class, sir, I will drop you where you want to go. Imagine this would be your mode of exchange, mode of barter system, if barter system were to be there today. Just imagine. So what is barter system? One person gives a product or service, other person also gives a product or service. Exchange. Barter system. Then came this money system, where you give product or service and get money, or you pay money and get products or service. So money is a medium of measurement. It's used as the mode of exchange. It's a medium of measurement. Then came this chapter where you exchange money for money, dollar for euro. Now, if I say I give dollar and get euros, what is the currency here? And what is the medium of measurement here? And what is the product here? I told you, in a transaction, you have to buy a product, let's say, and give something. In barter system, product comes in, product goes out. In money system, product comes in, money goes out. Here, in the currency, let's say USD, euro, we have, for example, what is being purchased and what is paid. That is a mystery itself. So here, that is why many students gets confused. So lesson number 1, when I say receive something, that is equal to I am purchasing it. Similarly, when I say pay something, that is equal to I am selling it. That seems okay, sir. Why are you telling this? No, this not seem okay. In your unconscious, subconscious, conscious mind, you know what really happened because you did so much of accounting. The moment you think about a seller, what comes to your mind? Okay, I'm a seller. So, receipt or payment. Hey, I'm a seller. I have to receive money. You see, the word seller in your mind, receive comes. You know why that comes? Because you sold and you have to get it. So your mind is thinking about the other transaction. Please think about that sale transaction itself. When you are selling, that means something going out. Okay, so if you are selling euro going out, so you pay euro. It may not look nice, but you have to understand it. So if you purchase 1 kgs of rice, rice I am purchasing, sir, rupee I am selling, sir. What? Yes, you are paying rupees. Paying means going out, means selling. So receive is nothing but purchase, is nothing but what goes out, going out, out. And pay is nothing but selling, that means coming in, that is coming in. Hope you're writing examples also. If you exchange, that is if you pay USD and get euro, it means, that means you purchased USD and sold euro. Purchased USD and sold euro. So if I say you purchased 1 kg rice, you purchased 1 kg rice for, let's say, 50 rupees. What does it mean? You purchased 1 kg and you sold rupees 50. So every foreign exchange transaction, every foreign exchange transaction, you will sell one currency, you will sell one currency and buy another currency. In every foreign exchange transaction, you will sell one currency and buy another currency. That is what is called as foreign exchange. Exchanging currency for currency, where both are products and both are currencies. That's where the confusion arises. So the fundamental reason why people struggle in this chapter is because of this reason, that is, in both transactions, normally we used to pay something, get something, so paying rupees, get a product, but here both currency itself is purchased and sold. Currencies itself are purchased and sold. So one currency is purchased, one currency is sold, which means one currency is received, another currency is paid out. Hope you written till here. Are you clear why you go wrong? We will understand one by one, step by step, how to approach and where you will face complications, and I'll tell you the method to overcome that. Okay, I'll go further. So this is what I was explaining. So in barter system, we exchange goods for goods, and in money system, we exchange goods for money, where money came in a money measurement principle. It's only against the uh, uh, product you pay something. So it's a medium of measurement, medium of exchange. That's all is money is all about. And in currency market or in foreign exchange market, we purchase goods and we purchase currency for currency. Once again, pay USD, get euro. Okay, we'll come to that now. Okay, so let's come to the first one. What is a foreign currency market? Foreign currency market is where currencies are bought and sold. Just like any other market, currency market is also a market. Currencies are purchased by one party and sold by one party, and both commodities are currencies. That's an interesting point. And we have exchange rate. It's price of one currency expressed in terms of another currency. Okay, let's focus on that. Okay. Okay. Let's understand exchange rates. Exchange rate, which means price of one currency expressed in terms of another currency. It's also called as the conversion rate. Foreign exchange rate or conversion rate. And the rate keeps on moving. For example, here we say example. Let's say 1 euro. 1 euro is, let's say, $1.8 US dollars. So you see, one currency, another currency. So two currencies are compared, two money compared. That is exchange rate. So $1, 1 euro is worth $1.8. And this rate will keep fluctuating, just like the way any product, like your oil price changes, your gold price changes, share price changes, just like the price movements, even the currency movements also will increase or decrease for the demand and supply. That movement is called as the currency risk that you carry, exchange currency risk. In some cases, they have pegged the exchange rate. For example, Dubai US dollar, 1 dinar is equal to fixed. They have not changed. It's not going to change for a certain period of time. It's a flat number. Otherwise, it's left to the market. Depending on market fluctuations, the exchange rate will keep fluctuating. So depending on the demand and supply, the currency movements, the currency exchange rate keeps fluctuating, and this uncertainty is called as exchange risk. And this uncertainty is called as exchange risk, or conversion risk, foreign exchange risk. So this chapter is about managing this risk. Okay, let's understand this exchange rate once more for the clarification on receiving, paying, purchasing and selling. Okay, suppose a person had 1,000 euros and he used this to get dollars, US dollars. So just an example to understand this receipt, payment, purchase, sale, that concept. Person had 1,000 euros. He used this to get US dollars. This is the transaction we would like to discuss. Simple transaction. So what this person is going to give and what this person is going to get. What is going out and what is coming in. Now you tell me, what currency is going out? What currency is coming in? A person, whatever person is standing here. What currency is going out and what currency is coming in? Simple thing. You had euro. Euro goes out. Dollar comes in. Very simple. You had euro, so euro goes out. And you want the dollar, so dollar comes in. So USD goes out. Euro goes out. USD coming in. Euro goes out. USD coming in. Now, euro going out means you are selling euro. And USD coming in means you are purchasing USD. So try to think the currency transaction like sale purchase. So you go to hotel, you pay 20 rupees, you get one plate idli. Sir, purchasing one plate idli, yeah, that expression is fine. Similarly, try to think, I'm selling 20 rupees. That mindset try to have. I'm not giving 20 rupees. I'm selling 20 rupees. Every transaction is a buy and sell. Every damn transaction is a buy and sell. Exchange, double entry system. Okay, now you are selling euro. You are giving euro, which means what? Your payment is in euro. Your payment or you're paying in euro. Your payment in euro. And what about your receipt? Coming in, purchasing in US dollar. Receipt in USD. So selling is the same as payment because in selling also it goes out, in payment also it goes out. Purchasing is the same as receipt because in purchasing also that comes in receipt also it comes in. So the expression I am purchasing euro, I'm purchasing USD is equal to receiving USD. The expression selling euro is equal to payment in euro terms. Cash flow in euro terms. Okay, now tell me, are you clear on the basics of it? Any doubts in this one? Okay. Let's go further. Okay. Now what I just told you is regarding the exchange risk. The movement is called as risk. Now let's understand how it's going to pose a risk. Fluctuation in rates. Why are you worried? Now is it going to affect you directly? For example, you being a CS student, it will not affect you directly. Indirectly, everything affects. But directly, are you worried today morning? Like the way you see horoscope today morning, you will see, oh, what is the exchange rate? No, you don't see it. It will not affect you. It will affect certain people. What kind of people and what kind of risk? Let's look at it. For importer, the risk is rise in rates. For example, $1 equals to 60 rupees. Now it becomes $1 equal to 65 rupees. So earlier you have to pay 60 rupees. Now you have to pay $1 only, but the worth has become 65. So when the rates increases, in general I'm talking about, in general understand, when the rates increases, it means it becoming more costlier, and costlier means it's not good for importer. Importer always will have a worry. of rates going up. For exporter, the opposite, fall in rates, because he will receive. So same example, $1 60 rupees he was supposed to receive, now $1 65 rupees. If he receives more, he likes it. But if $1 becomes 55 rupees, that means his inflow reduced, that is fall in rates. So for importer, when the rates increase, it becomes costlier, he is worried. Exporter, when the rates decreases, that means inflow is becoming less, he is worried. Now, we have hedging techniques like future, forwards, options, so that how to manage this risk, how to manage this position to make the cash flow certain in local currency terms. Dollars anyway we know, $1 we have to pay. But does 60 rupee comes in or 65 comes in? Or 60 rupees paid or 65 rupees paid? So the payment of cash flow, the receipt of cash flow management, we learn. Separate technique is there, hedging technique. But as of now, you understand the movements are called as exchange risk. Now, let's come to slightly more types of exposure. It's more theoretical in nature. Only one or two problem we will be doing it. Otherwise, will not be focusing on, but theory we'll discuss. Who will be purchasing and selling currency? What is the benefit derived out of it? It's a necessity. If you have to travel to US, you can't travel in rupee terms. You need to purchase USD. Once you're back to India, you can't have USD with you. You have to sell it back. So numerous reasons. Tourist, India has to make the payment in oil. Means they have to make the payment for oil. A lot of imports, gold in US dollar terms. We need to purchase USD. So when exporter happens, Indian company exports softwares, so they will give you USD, you have to sell it. So for thousands of reasons, will not go behind it. Who will be getting what benefit? So exchange risk, I was only telling the movement of rates. For exporter, the worry is there, and importer, the worry is there. How to manage it, we'll come to it later. Okay, I'm just trying to give you an idea. Okay, now types of exposure. What kind of risk you can have? Theoretical in nature. Transaction exposure. Transaction exposure means transactions is entered before the change, but settled after the change in exchange rates. Meaning what? Date of transaction is different from date of settlement. Now, for example, let's say on 1/1/2020, you purchase goods. You purchase goods worth $1,000. And on this date, $1 is, let's say, 70 rupees. And payment terms is payable after 3 months. Payment terms. Credit period, 3 months. Now, on 31st of March 2020, you have to pay, right, payment. And on payment, $1 becomes 71 rupees, means you have to pay more. Or if $1 becomes 69 rupees, you have to pay less. And why it is happening? Pay more, pay less. Because 1/1/2020 is date of transaction and 31/3/2020 is date of settlement. Because of this differential points, the exchange rates difference is going to have an impact on you. This is called as transaction exposure. Had you purchased on 1st of Jan and immediate payment, you purchase something online. You make the payment through credit card in dollar terms. So the moment you make the payment, the dollar term exchange rate is applied. Are you worried about exchange fluctuation? No, because transaction happened and payment is also done. So in the date of payment and the date of transaction, both are same. No worry about exchange rate, because that day the amount will be paid or received. You're not having any transaction exposure. But when transaction happened, but settlement is yet to happen. Either you have to receive or you have to pay yet. The settlement is pending. That is called as transaction exposure. Translation exposure, it's more of an accounting based. In your Ind AS 21 or AS 11, foreign subsidiary, a foreign branch, a foreign associate, foreign joint venture will have to be converted into Indian terms for consolidation purpose. Like we have monetary items, closing rate, non-monetary items, historical rate, and then we have income and expenses, take it at average rate. So those kind of conversion, what you do, that is called as translation exposure. The difference in foreign exchange, you might transfer it to P&L account, or you can transfer it to OCI, or you can transfer it to a separate account called as foreign currency translation reserve, FCTR. All those things what you have is called as translation exposures, accounting based. Then you have operating exposure. Operating exposure is more of an economics. In the sense, for example, $1 equals 60 rupees. Okay, now it is expected to become $1 equals 70 rupees. 70 rupees. Now, if you are a person who is having the product at, for example, let's say 4,200, or let's say $840. Your product, whatever TV you are selling, mobile you are selling, you are a manufacturer and exporter, let's say, and you are pricing at 840. So how much you are supposed to receive? Please calculate. 840 into 60 rupees. $840 into 60 rupees. How much rupee will you save now? How much will you receive now? $840 into 60 rupees, 50,400. Receive 50,400. Now, if it becomes 70 rupee, you receive more. 840 into 70. You receive more now because of exchange rate fluctuation. 58,800. So because you receive more, you know what you can think as a businessman. Anyway, I'm getting more. To get more business, why don't I offer discount to my customer? Okay, I'll give 10% discount to my customer. So what will happen? Your inflow is how much? $840, 10% discount. That is $84 you give discount. $840 minus 84. $756. Now $756 into 70 rupees. $756 into 70 rupees. You get 52,920. 52,920. You see, because of exchange rate, as a businessman, what you changed? You have increased your inflow. Your inflow is increasing. But that is not the focus here. You are able to reduce the price. You could reduce the price to what? 756, where it was product at 840. And what does your economics says? In the competitive market, all other things remaining same. When a businessman, a seller reduces price, what will happen to, or what is the impact? What you have discussed. Hope you remember basics of economics. When the price reduces, the quantity, demand, sales quantity increases, more number of people will buy from you. So you are able to make more profit. So because of this exchange rate fluctuation, you can change the price. There is an impact on price, and how much impact we can't compute specifically. It's all left to the decision of the businessman and also economics. Like what is the movement? You know, what is it called as? When price reduces, demand increases. Demand curve, I know. What is the ratio between the two? Any idea? Anyway, it's called as price elasticity of demand. When 1 unit of price changes, how much demand will change? All those economics will come into place. We'll not worry about the numbers, just the theoretical aspects. Because of the exchange rates fluctuations, your cash flow, expected cash flow will be arising, your economic exposure will be changing. All those is called as operating exposure or economic exposure. Theorics in nature, we will not focus on this much. Our problem area will be later, but they can ask you theory question on these things. So I have to explain you this. I have covered it. Okay. Now, what we discuss now here is very important. Please pay attention. What we discuss now, what we are going to discuss now, every second what we discuss is essential in full-fledged problems. Pay attention so that you don't have to take tension. Pay attention here. We have to understand these things. Direct quote, indirect quote, bid, offer, margin. Okay. What is this direct quote, indirect quote? I don't use it much, direct quote, indirect quote, while solving problems, but still, I need to cover this as a concept. In some problem, I refer it. Direct quote means 1 units of foreign currency equals ... units of local currency. So foreign currency I'm treating like a product. Local currency is treated as the money, medium of exchange. Medium of exchange. For example, $1 equals rupees 50. For an Indian person, dollar is not a medium of exchange. You don't transact in dollars in India. It's not an accepted currency. So dollar is like a product for us. Foreign currency is like a product for us. But what is the exchange in India then? Indian rupee, INR, rupees. So that rupee, what we have is medium of exchange. So for a US person, if you think in US, if you go to US, they say, let's say 1 pound equal to $1.5. Pounds are not valid in US. In US, pounds are not valid. So in US, pounds is a foreign currency and dollars is a medium of exchange. That's what they pay and receive. So that becomes the medium of exchange and that becomes local currency, and that is called as direct quote. Normally, we use everywhere direct quote only. Like you go to hotel, you pay something, you say, what is 1 plate? What is 1 unit? Or what is whatever is 1 thali? You explain, you ask like this. 1 unit something, 1 product, 1 kg, 1 mobile, 1 laptop, like that, 1 pen. Indirect quote is interesting. And let's see if we use it anywhere in life. Indirect quote means reverse. 1 units of local currency is equal to ... units of foreign currency. That is, example, 1 rupee, 1 INR, let's say 1 INR, 1 Indian rupee, 1 INR is 0.02 US dollars. So this local currency is treated as a product. Local currency is treated as a product. Foreign currency is treated as medium of exchange. Foreign currency treated as medium of exchange. So for example, for Indian person, 1 rupee equals to. For a UK person, 1 pound equals to. For a European, 1 euro equals to. So when you express in terms of your own currency, that becomes indirect quotes. So indirect quote is slightly intriguing, but it is used in some exceptional cases. But I just want to know, practically, have you used indirect quote anywhere? See, what is direct quote? You go to hotel and say, what is one plate idli? 20 rupees. Okay, take 20 rupees, take one plate idli. That is direct quote. Instead of asking that, you tell, sir, I have 20 rupees. How many idli you have? You have medium of exchange. How many idli you have? They tell 2. Okay. You give 10 rupees, you get 2 idlis. But it does not apply for masala dosa. You say, I have 25 rupees. How many masala dosa you have? They can't tell half, 1/4 and all. So you always tell 1 kg is equal to how much? One laptop equal to how much? Everything. One equal to how much? One class, everything. One book. But is there a place, can you think practically, where you offer rupee first and remaining whatever you get as a product, you accept it? Have you seen anywhere in life practically? You offer rupee, whatever you have, you give a rupee and say, for this rupee, how much ever it comes, give it to me. You always pay per class, right? Mutual funds you can say, but hey, we are not talking about too many things there. That's not a very common thing. I'm talking about very common thing. I'm sure everybody would have come across this. Everybody would have come across this. They would not have done it personally, but they would have aware of this. Vegetable, you don't really do it. You always negotiate, right? What is 1 kg? What is this one thing it called? You negotiate. Then you receive the balancing fare. Yes, you absolutely correct. You do it in petrol. I've never seen a person till today, whether 2-wheeler or 4-wheeler, he'll say, what is 1 liter or 2 liter? Put 2 liter. How much 2 liter? Take it. You never do it. What do you do? 100 rupees. How much ever comes, you put it. 1000 rupees. How much ever comes, you put it. Full tank. You never go by rupee based, right? You always go by quantity based. So you say, I'll give you rupee, balancing figure, put it. Whatever it comes, put it. I mean, that is called as indirect quote, where we are measuring as a rupee based. We are not totally telling one quantity equals, one unit equals. We are going by rupee based. Anyway, I just want to give you an idea. You got it. Now, please tell me whether these are direct quotes or indirect quotes. 1 euro equals 75 rupees. Tell me, is it direct quote or indirect quote? 1 euro equal to 75 rupees. Direct quote, very good. 1 INR equals 0.017 pounds. 1 INR, 0.017 pounds. Indirect, amazing, you are super. Now tell me, 1 USD equals let's say 1 euro equals 1.6 US dollars. 1 euro equals 1.6 US dollars. Now, this is where the confusion comes. You can't tell direct, indirect. It depends on the person who view it. That's why we should say direct quote and indirect quote are two sides of same coin. You told 1 INR equal to $0.02 as indirect quote because you are thinking like an Indian. But in the problem, though mostly but not necessarily. So if you keep it as a standalone basis, if you think from an Indian point of view, yes, this is one quote. But if you think from a US person point of view, it is opposite quote. So direct quote or indirect quote is always from a person point of view, which country he is from, person of origin. Depending on that, the point of view, direct quote, indirect quote will differ. And how do you calculate the other quote? For example, this is from a, let's say, European point of view. If I tell you, this is from European point of view. Now tell me, is this direct or indirect for a European? Direct. Amazing. When you are expressing in your own currency, it is not called as direct, my dear friends. I just told you, for an Indian, when you express one INR equals to, in your own currency, when you express, it is indirect. So for a European, when you express in your own currency terms, it becomes indirect. So this confusion always will be there, direct, indirect. And if direct, indirect, you go wrong, in a whole problem, you go wrong. So people follow this approach. I don't usually use this, but I have to tell you the concept I told you. Okay. What approach I solve while solving problems for a faster technique? This seems easy initially, but going forward, this can confuse you. Especially when you have cross rates. 2-3 rates you have to jump. In that case, this direct, indirect can be more intriguing, more confusing. What I follow this, my method is called as left hand side, right hand side approach. LHS, RHS. I follow that. For me, local currency, foreign currency does not matter. Direct code, indirect code does not matter. In some problem, they can ask you. That's why I told you the concept. But while solving the problems, I don't follow this approach. I mean, I'm going to explain you like this, so you should also follow my words. After that, which are comfortable, you can follow it. So, what is left hand side, right hand side? Very simple. $1 equal to rupees 50. That is my left hand side. Here, rupee 50. That is rupees right hand side. 1 INR, left hand side. 0.02 dollars, right hand side. 1 euro, left hand side. 75 rupees, right hand side. 1 INR, left hand side. Pounds, right hand side. 1 euro, left hand side. Dollars, right hand side. Clear? This will not be a complicated one. So everywhere I will discuss with this LHS currency, RHS currency. So we are not biased for any country. Any problem, let them give whatever currency they want. In some cases, you have to think the person of origin, but mostly for exchange, we just remove the country bias. Whole country, I mean, whole world is belong to us. We look at one currency, another currency. Keep it objective. Let's not go by country specific. In most of the problems, we are going to have this process. Overall, big problem especially, this works. Okay, but it comes with little bit of complications, challenges. Let's address it now. Okay, so our currency is like this. Let's say one, whatever currency, foreign currency, let's say, equals to so many units of local currency. For example, I'm telling, so this is left hand side and this is right hand side. Now, okay, this is the normal direct code. Normal, this is the direct code. So we are going for this. Okay. Sometimes they mention like this. So you should know how to convert it into left hand side, right hand side. That's why I'm explaining you. Sometimes they explain like this. Conversion rate. Is rupee 70 for every dollar, for every USD. Or they say one more, conversion rate is $1.7 for every pounds. So how do we write this here? In this case, first case, what is left hand side? For every USD, so 1 USD equals 70 rupees. So rupees 70. So USD will be a left hand side and rupee will be a right hand side. And 1 US here for every 1 pound, 1 GBP, Great Britain pound, 1 GBP equals 1.7 USD. 1 GBP equals 1.7 USD. So for every pound, so 1 pound equals. So this is going to be our left hand side that is GBP, USD is going to be your right hand side. Okay. Okay. So this will not be a complication one. When the complication arises, I'll show you now. Okay. This is the interesting one, important one. Please observe. If I write GBP slash USD in this example, or let's say GBP slash USD slash, how do we read? Is it one GBP equals or is it one USD equals? If it is per GBP, then 1 GBP equals. If it is per USD, 1 USD equals. Let me explain that. I want to focus only on that, so I'm rewriting it. GBP slash USD. How do we interpret it? If you interpret it as per GBP, then it is 1 GBP equals so many units of USD. Or if you read it as, you're not able to see, okay, once again, I'll just try it once more. Okay, I'll let once more. Suppose what I'm writing is GBP slash USD. GBP slash USD. If this is the quotation given, how do we interpret it? Do we say, if you interpret as per GBP, then it is 1 GBP equals so many units of USD. Is this correct? Or if you interpret it as per USD, then it will be 1 USD equals so many units of GBP. Which one is correct? If it is per USD, then 1 USD left hand side will be equal to so many units of GBP. Okay, so this is mostly, but not always. This is mostly, but not always. So you can interpret both ways. So that is an interesting point. Now tell me, if I say like this conversion rate, INR, or let's say USD slash INR equals 0.02. So how do we interpret it? It is going to be per rupee equals to, right? This is per rupee. That's what normally you see. So 1 INR equals 0.02 dollars. And this is what mostly used. Mostly this is what is used. So typically what we take, whatever denominator as per, whatever comes second number, no, that per USD, per INR, like this. But if the question says INR slash USD equals, let's say, USD slash INR only will be there. I'll write same USD slash INR 70 rupees. 70. Now tell me, do you think it is one same treatment will you give? Same thing, you have USD slash INR, USD slash INR. Do you think is it right to write 1 rupee equals to? We will say 1 USD equals rupees 70. Here we will apply this. So this comes mostly popular. Mostly this comes. Whatever second thing, we take it as per unit. But not always. Here we know 70 rupees. In some other currency, we may not know it. But what is the rule you have to follow is this. Just 1 second. Just 1 minute. Okay. Typically then we should know all the rates for you to apply this. But that is not definitely not practical. So I'll give you some proper ones. Which one you need to remember? So in general what you have to remember is higher priced currencies comes on left hand side. Just remember this. In general, higher priced currencies will come on left hand side. That is, you see, in this case, one US dollar was the higher rate. But here INR came because it was decimals. So INR came. But in general, higher priced currency will come on left hand side. What do you mean by that? You need to have a list at least. All list you can't do it. How many countries there only we don't know. So let me give you the idea. So currencies in their order of prices. Currencies in their order. As of now, I'm telling you the highest price currency, what comes mostly in exam problems. I'm not telling this is the highest price currency in the world. For the purpose of examination, which currencies are frequently asked, that I'm giving you. First, you write GBP. Okay. Then below that, you can write Euro. Then you can write USD. Then you can write others like Singapore dollars, Australian dollars, etc. Let's say Singapore dollars. Then you write INR, Indian rupees. And below that you write down yen. These are the commonly asked currencies in exams. Beyond that also 1 or 2 exceptions might be there. But if this much you know, I think you will be sufficient to face the exam questions. Only in this order you should remember. GBP highest, Euro, USD, SGD, INR, yen. I know you like Dubai also, Australia also. But this much is what is frequently asked in examination. These currencies. So you remember this order. And normally the higher priced currency comes on left hand side. For example, if I compare between GBP and USD, what comes on left hand side normally? If I say GBP slash USD equals, we will write it as 1 GBP equals. Okay. And one beautiful point to be kept in mind, in one problem, 3-4 rates may be given. Once you apply on the one rate, that okay, GBP comes left side, others also same thing only. The first one will become the left hand side. That is 3-4 rates might given. GBP slash USD, Singapore dollar slash yen. Like that they give many. The moment you fix one, you can identify one. The same rule will apply for other rates also. So between USD and SGD, between USD and let's say SGD, which comes on left hand side now. So GBP and USD, we wrote it as 1 GBP equals. Similarly, between USD and SGD, it will be 1 USD equals. So you don't have to remember so much. What you remember is only this much. GBP, Euro, USD, SGD, INR, Yen, Japanese Yen. Japanese Yen will be below Indian rupee. This much you know, whichever higher price currency comes on left hand side. That is sufficient. And most probably when they give you like this, it is that per unit. For example, here we showed per USD, that whatever slash is read as per. Most probably we can imply 90% of the cases. But you should be aware of this exceptional case also. You can make the judgment by observation. Hope you are in the line with respect to LHS and RHS. Okay, I'll go further. Hope you have taken down. Okay. Now we are going to the next level. Please focus in this also. This is also very important one. In our overall problem, this is going to play important role. Suppose I give you this. Given $1 equal to 50 rupees. So you have, let's say, $1,000. How many rupees you will get? $1, let's say, is equal to 50 rupees. And the question is, let's say you have $100. Screen is previous slide. Please confirm. Screen is previous slide. You are able to see, right? Okay. So $100 equals, so how much you get? How much rupees will you get? How much rupees you get? Simple one. 50 into 100, you get rupees 5,000. Perfectly correct. No problem in that. Suppose you need let's say 25,000 rupees. How much dollar required? You need 25,000 rupees. So what do? 25,000 divided by 50. You get $500. Okay. Now one more example. Suppose 1 pound equals $1.5. How many dollars must be sold to get, let's say, 3,000 pounds. How many dollars must be sold to get 3,000 pounds? Now, first you think, should I multiply, should I divide? Okay. When it's rupees, you're very, very clear. When to multiply, when to divide. Here also people follow different approach. They follow home currency, foreign currency approach. They follow cross multiplication approach, mathematical approach. Different approaches are there, but I will follow this LHS RHS approach. This is one of the main areas where students continuously struggle regarding when to multiply, when to divide. You had a similar problem in your CA foundation or your 12th or PUC's cases. You are having one concept of BRS, bank reconciliation problems. There also you faced a similar challenge. But the challenge there was when to add, when to subtract. Correct? Here we are having when to multiply, when to divide. There my teacher gave me very good technique. It applied 100%. You can also follow here. This will mostly applies. Technique like this. Read the problem. Take a deep breath from bottom of your heart. Feel whether it is plus or minus. From bottom of your heart, you should genuinely feel. And if your feeling is add, you subtract. If your feeling is subtract, you add, you will be cent% right. Because feelings are never right. They are just feelings. Feelings will not work in examinations. So, same approach you can apply here also. If your feeling is multiply, you divide. If your feeling is multiply, if your feeling is divide, you multiply, you will be right. Okay. I will not follow that approach. I will follow this one approach. Remember, again, initially you may feel the method I told you. Initially you may feel, method I'm going to tell you. You may feel, sir, this is complicated, sir. My method is easy, sir. I got the answer no easily. See, I got 4,500. You're telling in a big way. Now you may get the answer. In a full-fledged problems, when you go further, this method what you're discussing or any approach I've seen is going to be limitation. So this left-hand side, right-hand side method what I'm teaching you is going to be time-saving and efficient manner. Initially, it may seem that you can do better, but once we go further, this method works super. You only will tell after some time, you believe it or not. So initially, it takes some time, little bit of effort you have to provide. Please bear with me for that. You have to learn that, but it is going to save you a lot of time in full-fledged problems. And I don't claim this is my method. I have put enough research. As I told you, I'm into stock market. I don't speculate. I don't gamble. I don't go by feelings. I go by fact research. Sometimes research may not work, but does not mean I don't do research. So everything is based on data analysis research. This methodology also, I've looked at all the previous year question papers, RTPs, MTPs, and Institute Study Material Practice Manual, everything, and textbook, whatever in the market. And I've looked at many faculty lectures and I've selected the best, which is uniformly applicable in many cases. So this method, you have to trust me on that. So I have to give you so much of build up. Anyway, so this is the rule. In the question, if LHS currency mentioned, please observe my word. I'm not telling buying and selling. Buying, selling, receive, pay will come later. LHS currency mentioned, then you need to multiply. RHS currency mentioned, you need to divide. Okay. Now look at this one. Dollar equal to 50 rupees. Dollar is left hand side. 50 rupees right hand side. $100. $100. So dollars, don't look at $100. Dollars. Which currency is this? They have mentioned dollars. Dollar is which side? Dollar is left hand side. So you will multiply. Now 25,000 rupees. Rupees is right hand side. So right hand side means RHS. So we need to divide. We need to divide. Now apply same logic here. How many dollars must be sold to get 3,000 pounds? What they mentioned in the currency? Pounds. Buying and selling don't matter. They will always confuse you with that. Pounds they have given. Pounds is which side? Pounds is left hand side. Therefore, what we should do? We need to multiply. Multiply. One more I'll give. Let's see if you're able to apply this logic. A very important one. Learn it properly. Let's say 1 euro equals 1.8 dollars. How many how many euros must be sold to get 36,000 dollars? Please think carefully and tell me. The conversion rate they have given is 1 euro equals 1.8 dollars. And what currency they have mentioned? $36,000. So dollar is right hand side, and right hand side means divide. So 36,000 divided by 1.8, you get 20,000 euro. So very simple rule. But if you think this is complicated, something is easy, this also becomes complicated further. Very simple rule. It's going to play a very important role in high level problems. Here we're discussing slowly. Multiply, divide, left hand side, right hand side. Once we go further, I will not discuss this. Currency given, right hand side, divide. That's all. Simple only. Initially, you will take some time. So write down this. And one more small point. It may look funny to you, but I should tell. Once you apply the exchange rate, other currency must be obtained. What do you mean by that? See, here we had what, $100. You applied the rates. You got rupees. Here you had 25,000 rupees. You applied the exchange rate. You got dollars. Here you had 3,000 pounds. You applied the exchange rate. You got the dollars. Here it is dollars. You apply the exchange rate. You get euro. So when you apply exchange rate, other currency should come. That is common sense. Because that's the meaning of conversion. No, what do you mean by conversion rate? Conversion will convert one currency into another currency. That's the purpose of this chapter. So just keep it in mind. Once you apply exchange rate, another currency is obtained. In this example, $36,000 was there. You applied exchange rate of 1.8. You got euro, another currency. So rule to be kept in mind. LHS currency mentioned multiply. RHS currency mentioned divide. And once the exchange rate is applied, after applying exchange rate, another currency is obtained. Another currency is obtained. That's the purpose of currency conversion. Giving up one, getting another. Obtained. So please remember, I am not telling buying, selling. I am just converting from one currency to another currency. After applying exchange rate, another currency is obtained. Okay, hope you're clear. Shall I go further on this one? Okay. Okay. One more concept you have to understand is this. That is spread. Okay. Let's say you go to a bank and you are a customer, and they'll give you the rates like this. $1 equals rupees 70.25 hyphen 70.40. Why they give two rates? The two rates are given, one for buying, one for selling. One for buying, other for selling. Now tell me, if customer wants to buy, which means the bank has to sell, correct? Other person has to sell. At what rate will it happen? I mean, in this example, 70.25, 70.40. Bank wants to sell, customer has to buy. It will be 70.40. 70.40. Why? Sir, 70.25. No, customer buying at a cheaper rate. No. Okay. If customer buys at 70.25 and customer sells at 70.4, what is bank is doing? Oh, bank will sell at 70.25. I mean, and buy at 70.4. In that means bank will always make loss. Bank is not a charity institution. Already there enough mess. Don't give these ideas. Because banks are not here to support you, to help you. They are here to do business. They have funds from their shareholders. The bank has given, though they have taken borrowings. They have their saving banks money, fixed deposit money. They have to pay interest. They have obligations. They are doing business here. So bank is a trader here. So bank will be buying at a cheaper rate and selling at a higher rate. In other words, customer will always be on disadvantage position. So customer will buy at a higher rate and he will sell at a lower rate, or opposite. Bank will sell at a higher rate bank will sell at a higher rate and bank will buy at a lower rate. So this is what is called as bid offer. So bank sells. That means customer buys. Let me just write it slightly differently. For a bank and customer, bank will sell. means customer will buy. And this is called as offer rate. This is called as offer rate. Offer rate. And this will always be high. And bank will buy from customer. From customer, bank will buy. Customer sells. And this is called as bid rate. Bid ask, bid offer, we say. And this will always be less. Or in general, we can say customer will be in disadvantage position. What do you mean by that? He will buy at a higher rate and he will sell at a lower rate. Most of the problems we think from we think from customer point of view. So this rule you need to keep it in mind. Buy at a higher rate, sell at a lower rate. Most of the problem we think from customer point of view. That's called a spread. The difference between these two, bid rate, offer rate, bid ask. The difference is called as spread. That's the margin for the bank for them to transact. Margin I have not yet discussed. Let's discuss when we come to that point. Okay. Hope you have done till here. Okay. Now, some basic questions. Let's see if you're able to answer. Tell me, which one is higher, 3 or 4? Obviously, I know 4 is higher. Now tell me, 1 by 3 or 1 by 4? Which is higher? 1 by 3 is higher. Remember, 1 by 3. So when you take a denominator, when you divide, the lower value means higher value. So when you divide by a lower number, it is higher value because 1 by 3, more number of only 3 people to share. 1 by 4, 4 people to share. So 1 by 3 is higher. You know it, but that's a basic concept. You should keep it in mind. That is because, look at this one. Suppose if I give you like this, 1 USD equals, let's say I give you 50 rupees hyphen 52 rupees. Okay. If the LHS currency is, mentioned, LHS currency mentioned in the problem, let's say, is USD. Now tell me, are you going to multiply or are you going to divide? If LHS currency mentioned is USD. LHS currency mentioned, so we will multiply. Okay. Now, suppose if you want to buy USD, which rate will you consider? We multiplied by which rates? Buy at a higher rate. Customer point of view, 52. 52. Correct. Suppose currency mentioned is USD, but you have to sell USD. Currency mentioned is USD only, but you have to sell USD. Currency mentioned is left hand side, you multiply, and you have to sell, so take a lower rate, you multiply it by 50. That's fine. Currency mentioned, let's say, is rupees, INR. Currency mentioned is rupees, INR. Now what do? Rupees mentioned 50,000, 25,000, like that. Think only from customer point of view later, okay? INR, you will divide, right hand side, right? Rupees, right hand side, divide. Divide, okay. Now, if your objective is to buy rupees, buy INR, what you are going to do? You should divide. By INR means what? Either you do 1 by 50 or 1 by 52 and you buy at a higher rate. So either 1 by 50 or 1 by 52. One of them you have to select because you divide. And which rate? You are buying at a higher rate. But actually when you divide by lower rate, it becomes higher rate. So 1 by 50 becomes higher rate. And that's what you are going to select. Suppose same currency mentioned is INR only. But you are selling INR. So first INR, multiply, divide. INR, right hand side. INR, right hand side. So divide. And you will sell at a lower rate. So either 1 by 50 is lower or 1 by 52 is lower. Which is the lower rate? 1 by 50 is lower or 1 by 52? That 1 by 3, 1 by 4 example. 1 by 52 is lower rate. 1 by 52 is lower rate, and that's what we are going to select. So multiplying, people usually don't do mistake. Division, they do mistake. Rule is same only. You buy at a higher rate, you sell at a lower rate. But when you divide, remember, when you divide by a higher number, value becomes less. When you divide by a lower number, value becomes more. You write down this example. I'll give one more example. The next example I give will not be between rupee dollars. It will be between two foreign currency. So there you should get more confusion also. You should get clarity also. Okay. Is it done till here? Shall I give one more example? Hope it is done. Okay. One more example, let me write. Let's say the quote is like this: 1 pound equals $1.4. How many pounds to be sold? Okay, 1.4 hyphen 1.5. The two rates must be given. How many pounds to be sold so as to get 12,000 dollars. Okay, now first tell me, in this case, will you multiply or divide? This is right hand side, right? Dollars. You see dollars right hand side. So RHS currency mentioned, right hand side mentioned, divides. Like this, we should not so write in every problem. Be examples, I'm writing like this. Otherwise, you should not just divide. Now, are we buying or selling? This is a typical one. This is where student get confused, and CA Institute knows how to confuse you. Buying and selling. So the key is this. Listen to this carefully. Very, very important point. Listen to this carefully. In every transaction, buy also happens, sell also happens. That's the basics of exchange I told you. In currency market, one currency is purchased, other currency is sold. In every transaction, there is a buying, there is a selling. So just buying, selling, identifying not sufficient. Which one should I look at? I should observe that. In this problem, we have selected which currency? We have selected division based on this dollars, right? Based on dollars, USD, we took a decision. Stick to that decision. The basis on which you have chosen for division, you identified left hand side, right hand side currency, and you told divide. That currency, you stick to it till the end. So think only from dollar point of view. So think from USD point of view. Because USD is what? Which is mentioned. So USD is buying. USD is buying. And buying will be at a higher rate. So higher rate or lower rate. Obviously, because you're buying will be at a higher rate. And higher rate is this. Because you're dividing. So 1.4 is higher or 1.5 is higher. 1.4 is higher. So what is the answer going to be? $12,000 into 1.4 into 1 by 1.4, 8571.4. 8571. Okay. 8571, which currency? This is going to be pounds. Because once for a dollar, you apply the exchange rate, another currency is obtained. Another currency is obtained. Once you apply the exchange rate, apply conversion rate, you convert it. Other currency is obtained. We will do more problem later. You get the clarity, but I hope you got the concept right. Okay, so what we're trying to discuss here is this. If you think like a bank point of view, okay, let's think now from a bank point of view. Bank is, let's say, selling to the customer, and we know the rules. Bank will sell at a higher rate, customer will buy at a higher rate, all those things is fine. But where does bank get it? They are not the manufacturer. As I told you, they can't say that please wait 5 minutes, it will come hot, busy, it will come in hot, just wait for 2 minutes. They can't tell like that. They are not manufacturer. They can't print it like US dollars. They need to buy from the market. That is called as interbank market. Interbank market. Interbank market. So if bank has to give it to customer, means they have to buy from the interbank market. Now here we know bank will sell at a higher rate and the customer will buy at a higher rate. That we know. Now tell me, bank is buying in interbank rate. So will bank buy at a lower rate or higher rate? When the bank is transacting in the interbank market, bank is not in advantage position. Bank is in disadvantage position. So bank will also buy at a higher rate. Which means between bank and customer, customer is disadvantage position. Customer is at disadvantage position. But between bank and interbank market, bank itself is in disadvantage position. And this rate, what that rate they transact is called as cover rate. And this transaction is called as cover deal, cover rate. And difference between the cover rate and this rate, that the transaction with the customer, this difference is going to be profit or loss for banker. Some problem may be asked from bank point of view, so I'm telling you this. So what is the summary of all these things? When the bank is transacting with the customer, then bank is advantage position. When the bank is transacting in the interbank markets, they will buy from another bank or they will buy from foreign bank, whatever they want, or buy from another traders like Western Union, Cox and Kings, many things are there. Wherever they want, let them buy. Then in that case, bank is disadvantage rate. The bank is a disadvantage. Bank earlier was at advantage position. Bank is at disadvantage position. And this is, let's say, the transaction rate, whatever the rate with the customer, transaction rate. And this, let's say, is the cover rate, cover deal. Why it's called as cover rate? Because if you're selling to the customer, you're buying from the market. Or if you want to buy from the customer, you have to sell it to the market. Bank is just a dealer, intermediary. They buy from one, sell it to another. So with the customer, if you're selling in the market, I have to buy opposite transaction. With the customer, if I'm buying, I have to sell it to the market opposite. That is why you are covering your position. You are having a position with one customer and you are having a position with the interbank. You are covering that position. So one buy, one sell, one sell, one buy. This sale position will be covered by buy position, and buy position will be covered by sale position. So it's called as cover rate, cover transaction. And difference between the two, difference difference between the transaction rate and cover rate will be the profit or loss to the bank. The problem may be asked from a bank point of, some problem may be asked from bank point of view. In that case, you should be keeping this in mind. Okay. Hope you got this one. Okay. Let me go further. Hope you've taken down. Any doubts? Okay. One more small concept we'll discuss. That's called as margin on foreign exchange transactions. Okay. What is margin? Margin is not the amount to be deposited. Margin is like a commission charged. Margin is like commission charged. Now, please observe. Suppose bank is selling to customer, which means bank is selling, customer is buying, means this will be a higher rate, right? This will be a higher rate. Now, tell me here, do you think margin will be added or margin will be subtracted? They'll tell you 60 rupees and 1% something. So do you think it would be added or subtracted? It will be added, because bank is getting sales commission, they get more, and customer not only has to buy the amount or rate, and he also has to pay the commission. So the margin will be added. It's like a commission, I told you. It's not a deposit. If reverse happens, suppose bank is buying from the customer. So customer is selling and bank is buying, and therefore this will be a lower rate. And in this case, margin is subtracted. Margin is subtracted. So how do you remember this? This can confuse you sometimes. Add or subtract. I'll tell you one simple technique. You will remember it definitely. Remember this technique? Extend. Customer will be on disadvantage position. What is disadvantage position? You will buy at a higher rate, sell at a lower rate. Customer is already disadvantage position. Extend the disadvantage position. Extend the disadvantage position of customer. Okay. Let's see what is disadvantage position. disadvantage position, then extend his disadvantage. Papa is already disadvantage, extend this. That's how bank take advantage. So buying for customer, okay, we are thinking from customer point of view. For a customer, you'll buy at a higher rate. So if higher rate should increase, means what should happen? Plus margin. If he is selling, customer selling, he will sell at what rate? Disadvantage position, lower rate, lower rate. Extend his position, and what is going to be extend? Always getting less. Further disadvantage minus margin. Okay. Hope you got the basics once. LHS RHS rule, multiply divide rule, higher rate lower rate rule, and then margin, when to do plus, when to do minus. Oh, one more I forgot to tell. No margin in interbank market. No margin, no commission in interbank market. Which means when the bank and customer is transacting, this margin applies. When the bank and interbank is transacting, the margin don't apply. So they can loot only customer, not other banks. Anyway, so hope you have done till here. Let's go further towards problems. Okay. The following are the spot rates observed in foreign currency market, foreign currency per US dollars. Please tell me now, per US dollar. US dollar will be what? Do you think it will be left hand side currency or right hand side currency? Per US dollars. It is per something, per USD. It is left hand side, like 1 US dollar equal to, right? Per US dollar, 1 US dollar. Some of you still have confusion. RHS you're telling. Per US dollar, $1 equals to. So this is left hand side currency. All these things are right hand side currency. They said everything per US dollar. Per US dollar means $1 equals $1 per USD, per something, $1. So that is left hand side, all others are right hand side. British pound, Netherlands guilder, Sweden kroner, Switzerland franc, Italy lira, Japan yen. On the base of this information, compute the nearest to the second decimal the number of British pounds that can be acquired for $100. Don't read full, just read only what? $100. What currency given? $100, left hand side. So what will you do? You simply multiply. So how much do you get? So US dollar is left hand side. All other currencies are right hand side. Is left hand side because $1 equal to dot dot dot. So $100. So what they've given is right hand side, left hand side. So multiply $100. Okay, first do one thing. We'll just fix multiply divide, then we'll calculate the number. So let's be more clear on that. Here we will multiply. For second one, tell me $50 Dutch guilder, a European monetary legally currency will buy. So much you don't worry. Just to focus on 50 Dutch guilder. Now Dutch guilder is right hand side. We have observed. So we are going to do divide. Means 1 divided by. Swedish krona that can be acquired for $40. Again, read only the currency. Dollars, US dollars, left hand side. So we will multiply. Dollars that 200 Swiss franc can buy. Don't read full. Concentrate only on 200 Swiss franc. Swiss franc is right hand side. So you will divide. 1 divided by. Italian lira, an EMU legally currency that can be acquired for $10. Focus only on mentioned currency. Dollars 10, multiply, divide. Dollars 10, $10. Dollars you have identified left hand side. Means we are going to multiply. Dollars 1000 Japanese yen will buy. Don't read full. 1000 Japanese yen. Japanese yen in the expression is right hand side. Right hand side means we will divide. So what are the answer you get? This $100 multiplied by 0.62. That's 62 only you get. And other currency you get 32 British pounds. And here 50 divided by means into 1 by 1.9. 26.32. Which currency is that? Netherlands guilder. Whatever. You divide, you got dollars. Okay, they have given guilders, you get dollars. Then $40 multiplied by $40 into 6.4. $256. Swedish kroner. I'll write SK. Sweden kroner. Sorry, Sweden kroner. I'll say SK. Then 200 Swiss francs divided by, so 200 into 1 divided by 1.5. $200 divided by 1.5. 133.33. Since we are dividing, other currency we get, which is dollars. And here $10 multiplied by 1,300. That is 13,000 Italian lira. The last one we divide 1,000 Japanese yen into 1 by 140. 714.29. 1,000 divided by 140. 7.14. 2 decimal is sufficient. 7.14 dollars. Other currency dollars will buy. Okay, let's go further. Let us move to this problem, and along with this problem, let's also revise the concepts. Just one second. Can come to this problem. Okay, so basically you have to fill up the table here, identifying the appropriate rates for the transaction. So let's quickly recap. In foreign exchange, what you purchase and what you sell also is a foreign currency. So foreign currency itself is a medium of measurement, and the currency itself is a product. Therefore, when I say purchase one currency, it is equivalent to receiving that currency. Selling the currency is equivalent to giving that currency. And every foreign exchange transaction, a purchase of one currency will happen and sale of another currency will happen. And the decision whether to multiply or divide depends on which currency is mentioned in the problem. If left hand side currency is mentioned, one unit something equals to, and then that will be multiplied. If right hand side currency is mentioned, then that will be divided. If you are purchasing the currency, then you are taking a higher rate because customer will be at a disadvantage position. If you are selling, then you will be selling at a lower rate because customer is at a disadvantage position. And you should be very careful with respect to which currency you are buying and selling, because in a transaction, one currency will always be purchased, other currency will always be sold. So there will always be purchase and sale in a problem. You should think from the currency which you started. Whichever currency mentioned, that should be the basis for you to make a buying or selling. And when you divide, you should be extra careful, because 1 by higher number will actually be lower and 1 by lower number will actually be higher. So based on that, let's take this one. So 1 USD equals to so much of rupees. So USD is left hand side here, right? Purchase 1000 USD. Purchase will come later. 1000 USD left hand side. Therefore, we will divide. Now, because we are purchasing will be at a higher rate. Now, which will be, sorry, this is left hand side, I'm sorry. Okay, USD, left hand side. Left hand side means we multiply. And multiply means we just go with straightforward calculations. Higher rate or lower rate, because purchasing at a higher rate. And multiplying, no confusions. Higher rate means 50.25. They have not asked us to calculate the amounts, but if at all you do, you would have done 1000 USD into 50.25. You would have done it if you want to purchase that. Okay, we just have to fill up the table. That's all we had, sufficient. 1 GBP, 1.45, 1.75 USD. Purchase 1000 USD. So here USD, you see, USD is the currency mentioned, and this currency is right hand side, and right hand side means divide. And we are purchasing this currency, so higher rate. But we are dividing, so it will be 1 by the lower rate, and 1 by the lower rate becomes 1 by 1.45. Remember, when you divide, the higher rate is 1 by the lower rate. When you do 1 by lower rate, you actually get the high rate. So 1 by 1.45, you end up getting the rate applicable for purchasing 1000 USD. Hope you're getting it. Let's do it a little faster. Sell 1000 USD. USD is left hand side. So multiply. Selling will be at a lower rate. Since we are multiplying, straight away rate we can select 50.12. Then purchase 1000 GBP. GBP is our left hand side. So multiply. Purchasing at a higher rate, and higher rate Since we're multiplying straightforward, 1.75. Sell 1000 euros. You have euros. Euro is right hand side, means you divide, and selling at a lower rate. And because you're dividing, lower rate is 1 by higher rate, and 1 by higher rate is 1 by higher rate is 1.9045. 1 by 0.9045. 1 by higher rate is actually the lower rate. 1 AUD is 1.8 1.85 SGD by SGD. SGD is right hand side, so you divide, and buying at a higher rate, and you're buying at higher rate but dividing, so 1 divided by lower rate, so 1 by 1.80. Higher rate is 1 by lower rate, 1 by 1.80. I'm spending so much on basics so that going forward in full-fledged problems, you should not have the confusions. Just 1 second. Okay. Then sell 1000 GBP. GBP is right hand side, again divide, and selling at a lower rate, and because you're dividing, lower rate is 1 by higher rate, which is 1 by 0.6025. 1 by 0.6025. 1 by 0.6025. Then sell euros. Euro is on left hand side, so multiply, and selling at a lower rate, and since multiplying, straightforward lower rate, which is 1.45. Sell USD right hand side, divide, selling, so lower rate, and you are dividing, therefore lower rate is 1 by higher rate. 1 by higher rate is 1 by 1.75. Last one, buy AUD. AUD is left hand side, so multiply. Buying at a higher rate, and higher rate is because you're multiplying straightforward higher rate, 0.9045. Okay, I hope you are fine with that. Any doubts in any of the cases? And you should be extra careful when you divide. In the sense, identifying which value is less, which value is high can be slightly confusing. But once you are understood, this is not going to be a confusion till you get that confidence. When you divide, if you want a lower rate, you should take a 1 by higher rate. When you divide, if you want a lower rate, 1 by higher rate. Lower rate is actually 1 by high, and higher rate is actually 1 by low when you divide. I hope it's fine. Shall we go further? Okay, I'll go further then. Okay, before we go to the next set of problems, let's understand this concept, cross rates. So what do you mean by that, cross rates? Okay, it is the exchange rates. It is the exchange rates determined based on multiple currencies. or intermediary currency. For example, from INR, if you want to go to Australian dollars, let's say AUD, you can go to directly INR to Australian dollars. This is straight rate. And what is intermediaries from INR? Let's say you go to USD, and from USD you go to AUD. This is cross rates. This is like the way you travel. Similarly is the cross rates. Why it is done? What is the reason for it? Sometimes it's a necessity. For example, there are so many countries in the world. There will not be having an exchange rate for every two currencies. You understand, right? How many conversions should be possible? For example, even if you take, there are five, let's say five currencies. Now, ABCD, let's say ABCD, five currencies are there. ABCDE. Now, can you tell me how many rates are possible, exchange rates are possible between A and B, between A and C, right? Between two currencies. If you start listing it out, how many possibilities are there? Can you think? I'm just talking about five currencies, five countries. How many exchange rates are possible? 10, 50. Okay. Now look at this one. AB, AC, AD, AE. 4 over BC, BD, BE. 3 over CD, CE. 2 over then DE. 1. Totally you get 10. Actually it is 5C2. Combination wise. 5C2. Anyway, because two things at a time. It's like number of matches. It's like IPL matches. If there are 8 teams, you get 28 matches. 2 times means 56. Like this, if there are 150 countries in the world, 190 countries in the world, imagine how many conversions are possible. So practically also you see, every currency will not have a conversion rate with all other currencies. Practically not possible. See, for example, even if you go to, let's say, a country like Kenya, or a country like Malaysia, or any other country where rupee may not be very frequent. So when you go out of India, what do? You don't take that currency. Like let's say Russia, for example, let's say Russia don't have rupees. So what do? From Indian currency, you take US dollars. When you're going out of India, you go to Russia and convert US dollar into Russian currency. You understand? That is, a straight rate may not be available. So in that case, you use one rate to another rate, another rate to another rate. That is INR to USD, USD to AUD, because in most of the countries, US dollar is accepted form of currency. You will have a dealers with US dollars. You will have mostly. Even if you go to any exchange dealers, you go and look at outside, even in airports. In India, you will not have exchange rate for all. Some 10, 15 currency only you will have. Remaining currency? No, you will use cross rates. They'll say convert your rates into dollars, and from dollars will convert to rupees. So we take that. That is necessity. And sometimes it becomes an opportunity also. For example, if you do INR to AUD, it becomes 70 rupees, let's say. Now, when you do INR to USD to AUD, it becomes 68 rupees. So if you're planning to buy AUD, this is more cheaper than straight rate. Make use of that. Or you can use arbitrage opportunity. Buy at 68, sell at 70. So you are having sometimes necessity, cross rate, and sometimes it becomes an opportunity. Either for a cheaper rate, higher rate, or you have an arbitrage opportunity. We'll cover those situations. Okay. So first we'll target how to arrive at those cross rate. What steps need to be followed. Let's focus on that. Two things are possible. So I'll give you slightly two different techniques. That is when spread is given. Let's say when spread is not given. And another case when spread is given. What do you mean by that? Let me give an example. When the spread is given means, let's say they give you this $1 equals rupees 50 and $1 equals, let's say 1.5, or let's say 1 pounds equals $1.5. So they are giving only one rate. That is when their spread is not given. No bid rate, offer rate. But sometimes they can give you $1 equals to rupees 50 hyphen rupees 51, or 1 pound equals $1.5 hyphen $1.6. When they give you bid rate, ask rate, that's where it can become more complicated. But no issues. I'm telling you the method here. Let's focus on that. Okay, when the spread is not given, very easy. Now, here I'll just slightly convert it into numerator denominator format. LHS, RHS, you are very clear. This is what 50 per dollar, right? 50 per dollar. So I'm going to write down like this. Okay, what is required actually? From dollars, I want to go into pounds. That's my requirement because, sorry, from rupee, I want to go into pounds. Dollar to rupees we have, and pounds to dollar we have. Okay, let me do one thing. Let me start a fresh page so it will be more clear. Let me first focus on when spread not given. So let me tell you fresh so it will become more neater. First, let me tell you generic terms when the spread not given. Let's say you want currency between A by B, and that means we are going to do, let's say we have the currency is intermediary C, let's say. We'll do A to C and we'll do C to B. Intermediary C. So what do we do? A to B. That's what we want. A by B. A is in numerator, B is in denominator. Now in between, what do? We put C each. Example. I need, let's say, INR per GBP. And currency what we have is from INR to USD and from USD to GBP. This is what we have. So how are we going to write? First you write INR, numerator. Then you write GBP, denominator. INR by GBP, the intermediate currency is USD. So INR by USD into USD by GBP. Like A by C into C by B. C gets cancelled, A by B only you get. Simple one. First you write down this basic thing. Then we come to the numericals for this. This is very simple. You write INR by GBP as expansion of INR by USD, USD by GBP. Last slide, I'm rewriting it for you. With the example, I'll tell you. With numericals, I'll tell you. First, you write down this. Don't worry about the previous examples. I'll rewrite the example. Okay, let me use the same numerical example. $1 is 50 rupees. And 1 pound is $1.5. Same example I'm taking. Okay. Now, $1 is rupees 50. That means what? Rupee per dollar, this is. Rupee per dollar. For every dollar, 50 rupees. Rupee per dollars. So, how are we going to write? Rupee per dollar, INR. per dollar divided by USD. Rupee per dollar. INR by USD. INR rupee per dollar. Or if you want, you can remember like this. This is right hand side divided by left hand side. So if you want to express into a fraction format, you know our regular format, LHS equals RHS, that currency we will express. If you want to express into a fractional format, you write LHS, RHS divided by LHS. Right hand side divided by left hand side. Then you can express into a mathematical format. Okay, apply this logic and tell me, here how do we convert? 1 pound equals to $1.5. How do we convert this? Please tell me. In the fractional format, right hand side divided by left hand side. Which is right hand side? In the second quotation, we have 1 pound equal to $1.5. Which is right hand side. Right hand side we have is $1.5. Numbers will come to it later. What is the currency? I'm only focusing on that. So it's dollars, USD divided by pounds. Simple one, simple enough. Right hand side divided by left hand side. That will convert it into fractional format. Why fractional format? Because fractional format is very easy in this case. That's why I'm choosing this. When spread is given, I don't follow this method. We follow a regular method. I'll tell you how. And it will be easier. Here, you just have to convert into a fractional format. Okay. Now, what do we require? In this case, let's say I require INR per GBP. How are we going to write? INR divided by intermediary currency USD into USD by GBP. Now, INR by USD, do we have? INR by USD, we have it. That is 50. USD by GBP, do we have? That also we have it. So use it, 1.5. So it becomes 50 into 1.5, that is 75. Suppose USD by GBP not available, GBP by USD available, reciprocal available, you do 1 divided by. Understanding? If USD by GBP is not there, GBP by USD reverse is available, no problem, take a reciprocal, you get the answer. In this case, we directly got it. That is USD by GBP directly available. If it was other way around, you do 1 divided by. If it was GBP by USD is 1.5, I would have taken reciprocal. That's all. So only key point to be kept in mind is this. RHS divided by LHS will express in fractional form. The fractional form of conversion rate. RHS divided by LHS. We discussed, right? This when we write slash, usually it is read as per something. That's what it means. Okay. Hope you have taken this example. Numericals, we'll see it later. Okay. When spread is given, let me give you the example. When the spread is given. Okay. When the spread is given, which rate to take can be slightly confusing. So I'm giving you this simple technique, follow it. Example, I'll take same example. Suppose I want from INR to USD to GBP. Let's say my ultimate objective is buy GBP. Objective is buy GBP. if ultimate objective is buy GBP. Now tell me, I have rupees, I need GBP. So from rupees I convert to USD, from USD convert to GBP, I get GBP. I have rupees, I want pounds, from rupees I convert to dollars, from dollars I convert to GBP. So my ultimate objective is buy GBP. Now technique is this. Technique here is this. What you should do, since ultimate target is buy, keep all the transactions in buy. Why we should do like that? In my method. In my method, the technique is identifying buy or sell transaction. Why? Because in every transaction, one currency is buy, other currency is sold. So we can always think INR to USD means INR is sold, USD is purchased. USD to GBP means USD is sold, GBP is purchased. Too many conversions, too many confusions. That's why the key in my method is always simplifying and focusing on what is the requirement. What is the requirement here? Buy GBP. So all the conversions, express it in buy terms. Once you're clear as to which currency, what you're doing, selecting the rates becomes easier. So since ultimate target is buy, express in buy terms. So in the last transactions, you buy GBP. In the previous transactions, you will buy USD. One more example I'll give. This time I'll do two intermediary currencies. Let's say from INR to, let's say, AUD, from AUD to, let's say, Singapore dollars, and from Singapore dollars you are getting something like, let's say, GBP. Sometimes you take 2-3 buses also while traveling. Even when you go to US from India, you will always take two routes. Either you go through London or you go through Dubai. So these intermediary rates are always possible. Okay, now let's say ultimate objective is same, buy GBP. Ultimate objective is buy GBP. Now please tell me here, what is going to be our last buy? Between Singapore dollar, GBP, what I buy? You look at the arrow coming in, you can easily identify. Arrow coming in is buy, arrow going out is sell. So which arrow coming in, which arrow is pointing towards? You are buying it. So in the last transaction, you buy GBP. You buy GBP. Previous one, you tell me. Between AUD and SGD, what is that you are buying? Everything should be expressed in buy terms. Between AUD and SGD, arrows coming in, you are buying SGD. Between INR and AUD, what you are buying? AUD. Buying AUD. I hope it is very simple. So if the target is, buy, then express all transactions in buy terms. If the target is buy, express all the transactions in buy terms. Similarly for sales. Similarly for sales. Means what? If your objective is sales, express everything in sales terms, but one small correction. Similarly for sale, but start with the currency to be sold. Start with currency to be sold. Start with currency to be sold. What do you mean by that? The same example. I'll do both the examples. Suppose I have to, objective is sell GBP. I have 1000 GBP with me. I want to sell it. The rule is simple. All the transaction should be expressed in sell terms. My objective is buy. All the transaction should be in buy terms. Objective is sell. All the transaction should be in sell terms. But point, when you are selling, start from GBP because you have it. So start from that. Now GBP to USD and USD to INR. Now please tell me what you are selling here. In the first currency, for starting point, which currency you are selling? You are selling GBP. Second transaction, what you are selling? Only focus on selling. Don't worry about buying. In the second transaction, which currency you are selling? Arrow going out. You can easily observe. Selling USD. Once you are thorough with buying and selling rate, then our regular route, left hand side, buy higher rate, right hand side, buy, one by lower rate, you will be able to select it. Second one also will write down. If you want to objective is to sell GBP, start from GBP to reverse SGD, from SGD to AUD, from AUD to INR. Sometimes this is a way used to travel when you are a child also, at least some of you maybe. When you are going to the school, from home to the school you go, straight route. But from the school to come to home, you go to the ground, you go to the shops, you go to the some other friend's place. Then after all this, at the end you come home. That is cross routes. Anyway, so everywhere it's applicable. Now, since ultimate target is sell, every transaction should be in sell, sell, sell. So first selling GBP, next currency sold, sell SGD, next currency going out, arrow going out, sell AUD. If your ultimate objective is buy, everything in buy terms, arrows coming in. If it is sale as objective, everything in sale terms, arrow going out. And if you are purchasing, that is your target. If you are selling, starting from that point, you are keep on selling it. I'll apply the example what I gave you first. First, you make sure you write down this and let me know if you have any confusion. Then I'll give you the example. Then we go for problems. Okay, good, done. Okay, same example I'll take. $1 is 50.51. And 1 pound, 1.5, 1.6. Okay. If my ultimate objective is to buy pounds, that is objective. So how do we do? From INR, I convert it to USD. From USD, I convert it to GBP. Since we are buying, last transaction is buy GBP and buying USD is the previous transaction. Okay. Now look at the currency USD. USD and rupee left hand side, and you therefore you multiply, and you're buying means it will be at a higher rate. And what will be the higher rate? It will be rupees 51. 51. Now buy GBP and pounds. Look at GBP and pounds. GBP left hand side. So multiply, and you are buying at a higher rate. And higher rate is again straightforward higher rate 1.6. Multiply 151 into 1.6. 81.6. So 1 GBP will cost you 81.6 rupees. Okay. If your objective is to sell, objective is sell GBP. So starting from GBP to INR, from INR, from GBP to USD, intermediate is USD. From USD, you come to INR. Okay. So what is your objective? You are selling GBP. So sell GBP. Express everything in sell terms. Sell GBP and sell USD. Selling. Everything should be selling. Now GBP, in this case, GBP left hand side, you multiply, selling, therefore lower rate, and lower rate is straightforward lower rate. It is 1.5. If it was divided by, the lower rate would be 1 by 1.6. 1 by higher rate. But straightforward multiply, take a straightforward lower rate. Sell USD. USD again left hand side. So multiply. You're selling at a lower rate, straightforward sale rate, straightforward lower rate, because you're multiplying rupees 50. So multiply, you get, I think, 75. So 1 GBP is rupees 75. Or if I mix both, overall, if I have to write in the bid rate, ask rate terms, 1 GBP equals 1.75 hyphen 81.6 rupees. Of course, practically so much variation cannot happen. This is just an example. Difference between with spread, without spread. With spread, we are worried about buying, selling. Without spread, we are not worried about that. And the mode of solution is different. Here we are not converting it to fractional formats. We are doing left hand side, right hand side format only. But without spread means we are converting into fraction. That's more easier. That higher rate, lower rate is not there. We always multiply? No. I just told you, no. We never, depending on left hand side, right hand side, we cannot say always multiply. That depends on the transactions. If it is always multiply, I could have told always multiply. Why I have to told you full calculation? See, this time it happened. In every problem, it will not happen. If every problem it happens, I would have told you just multiply. Why should I give you so much of explanation? Multiply, divide, left hand side. All those things I told you, right? Depending on what currency is left hand side, depending on what currency right hand side. If you are buying right hand side, it happened to be left hand side here. In this case, happened to be left hand side. That's it. Both happen to be left hand side, but not necessarily. That was I just told you. You're repeating the same thing. In this problem, it happened. In every problem, it may not happen. Otherwise, why should I explain you so much? Left hand side multiply, sell lower rate. All those things I told. Otherwise, I told, okay, lower rate take, higher rate you take. Simply. That's not the case. We have to follow the full process. By solving one problem, please never come to conclusion. All the problems are like that. If you solve 10 problems and then if you get the same answer, then you come to conclusion. I think that's a problem with our mindset also in general. When one WhatsApp news, when some message comes, we conclude, okay, this person is good or this person is bad. Don't jump to conclusion with one example. Always see 10 problems, 15 problems. In every problem, if it happens like that, then you come to conclusion. Not with just one. Any other doubts? Okay, hope it is fine. Okay, so let's do this problem now. Let's do this problem. On January 28, 2005, an import customer requested the bank to remit Singapore dollar 25 lakh under an irrevocable letter of credit. However, due to bank strikes, the bank could effect the remittance only on February 4, 2005. The interbank market rates were given. The bank wishes to retain exchange margin of 0.125. How much does the customer stand gain or loss due to the delay? Calculate rates in multiple of 0.001. So problem is from the point of view of customer. How much does the customer stand gain or loss? When the problem was from the point of view of the dealer, bank, it was actual profit. At what rate he sells, at what rate he buys. Dealer, intermediary. With the customer he may sell, interbank market he will buy. Difference was profit or loss to the dealer, intermediary. But this problem is not like that. Slightly different, process is same. He requested the bank to remit when he wanted on 28th January. But because of some reasons, because of bank strike, the bank could effect the remittance only on February 4th. In the sense, his request was made on January 28, but actual delivery took place on February 4th. So in this period, the rate would have increased or the rate would have decreased. Suppose in this date itself, I'm just giving an example. If it was 50 rupees conversion rate, if there was no strike, that would have been settled. I'm just giving an example. But because of this delay, it became 51 rupees. So because of 50, you have to pay more. That is a notional loss. Because of the strike, the payment, the delivery got delayed, and because of which extra 1 rupee for the customer to pay, that is a loss for him, notional loss. Comparatively. If it was other way around, if it would have become 49, because of delay, he saved also. So because of the strike, what is the impact on customer position? That is what we need to discuss. So what does customer stand gain or loss due to the delay? So gain or loss due to the delay? Gain or loss due to the delay. What we are going to calculate? Rate applicable on January 28th we calculate the original dates. Then we calculate rate applicable on February 4th. And we'll see if the rate has increased, if the rate applicable February 4th increased, then it is going to be a loss. Why? Because the cost is more. Importer customer, he has to purchase. Cost of purchase becomes increased. And if price goes down, then customer is going to gain. It increases means you have to pay more. For importer, it becomes more costlier. If it reduces, his expense is saved. That means gain. Loss because you have to pay more. Payable is more. And gain if it reduces because payable is less. And please remember, you are thinking from customer point of view. All these things is from customer point of view. Okay, let's understand now. In January 28th, what are the things to be applied? Then we'll come to February 4th. Okay, now so many rates are given. Now one important thing is what is the starting point of the currency? What is the ending point of the currency? When nothing is specified and rupee is available, we usually take rupee as a starting point. Rupee is there. Rupee is there. INR, rupee is there. Now rupee to what currency? Which currency do you think? Bank to remit Singapore dollars. That means ultimate objective is Singapore dollars, SGD. So what is overall objective then? Overall objective is to buy Singapore dollars. Overall objective is to buy Singapore dollars. So starting point is INR, ending point is Singapore dollars. Since overall objective is buy, whatever the cross rate we build now, everything should be in buy terms, even though we know other currency is sold. Now, which are the currency available? INR to US dollars. So one rate INR to US dollars. Then from US dollars, we have US dollars to pounds, US dollar to pounds, GBP, pounds. And from GBP, we have SGD. So from GBP to SGD. See, if you are clear till here, and if you have any doubt, let me know. Objective is SGD. Starting point is INR. Rates available. Accordingly, you move whatever rates available. INR to USD available. USD to GBP available. GBP to SGD available. And what is your ultimate objective? Is to buy Singapore dollars. Express everything in buy terms. So between USD and GBP, which one will you buy? Arrow coming in. Which one will you buy? That is buy GBP. And between INR USD, which one will you buy? I know INR you sell, but you buy USD. Again, I repeat once more. We know in a transaction, one currency you buy, one currency you sell. But we don't want to think from both the points of view. That will confuse you. We want to think only one transaction. And which transaction we think depends on ultimate objective. In this case, since ultimate objective is buy, in every transaction, I'm choosing to consider only buy. Whatever sale was there, but we ignore it. We don't use it for solution. It is happening. When I buy GBP, automatically USD is sold, but I don't want to look at that. We just want to focus on which currency is purchased. So lastly, we purchase Singapore dollars. Before that, we purchase GBP. Before that, we purchase USD. Okay. Now, between INR and USD, between INR and USD, between INR and USD, rupees, I mean, we are doing what? Buying USD. And USD is our left hand side. USD is left hand side. Therefore, we will multiply and buy at a higher rate. And therefore, higher rate will become straightforward higher rate 45.90. We are buying higher rate and multiplying, so straightforward rate 45.90. Okay, now between USD and GBP, what is happening? We are buying GBP, and GBP, pound is left hand side. Therefore, this also left hand side, multiply, and buying will be at a higher rate. And higher rate, straightforward higher rates. I repeat once more. Between USD and GBP, between pounds and US dollars, pound is left hand side. And we are buying GBP only. So it is left hand side. So multiply. And it is at a higher rate. And which is higher rate? Straightforward higher rate. Because we are multiplying, it is 1.7850. 1.7850. 1.7850. Now, between GBP and USD, let's see if you're able to do and tell me the number. Between pounds and Singapore dollar, what rate is applicable and what to be done? Multiply, divide. Which rate and what to be done? Okay. So we are buying SGD and SGD is right hand side. SGD is right hand side and therefore we should divide. Right hand side, so we should divide. And we are buying. So buying at a higher rate. And when you're dividing, which is going to be higher rate? 1 by lower rate becomes the higher rate. So which is the lower rate? 1 by 3.1575. 1 by 3.1575. 1 by lower rate becomes the higher rate. One by 3.1575. So do that all. So what do you get? 45.9 into 1.7850 into 1 by 3.1575. 24.9482. But they also said bank wishes to keep a margin of 0.125%. So we need to consider margin. Should we add or should we subtract? As I told you, extend the position. If it is advantage position, extend it. Disadvantage position, extend it. This is disadvantage position. So we purchased at a higher rate. Now margin means extend the disadvantage position even more higher rate. So we will do plus. The margin will be added of 0.125%. We take 4 decimals. I think you get 0.0324. Therefore, 25.9482, 0.0324 plus 25.9482. 25.9806. The applicable rate 25.9806. So if the transaction would have happened on the 28th, the rate would have been 25.9806. So rate applicable is 25.9806. Okay, now let's calculate the rate on February 4th. Same route applicable from INR to USD, from USD to GBP, from GBP to SGD. Okay, now from INR to USD, same route actually applicable. Let's compare. The transactions. Ultimate is to buy Singapore dollars, buy SGD. Previous thing what we buy GBP. Previous thing we do buy USD. In fact, you can do same way what we did earlier, but we'll do apply once more for practice. So between INR and USD is left hand side, buy USD left hand side. So LHS we multiply, and we are buying will be at a higher rate. So higher rate will be on February 4th 45.97. 45.97. In fact, you can do slightly more faster also, because we are looking at the same rate. Whatever we did on January 28th, we should do same on February 4th. So February 28th, what we have taken 45.9. Correspondingly, what to do 45.97, because same rate we are repeating in different date. So that way you can do it much faster, but I am doing it same way because we get more practice. Now coming to USD to GBP. USD to GBP, what we have? Pound left hand side, and we are doing GBP only, purchasing GBP left hand side only. So buying GBP, buying pounds left hand side, so multiplied. Since we are buying, it will be at a higher rate. And higher rate, straightforward higher rate, 1.7775. 1.7775. And you can see correspondingly higher. Previously we have taken 7850, now we take 7775. Corresponding number only we are taking. Okay, next GBP and SGD. We are buying pounds. We are buying SGD, which is right hand side. Buying SGD, right hand side. So we need to divide and buying at a higher rate. And because we are dividing, when you want a higher rate, it has to be 1 divided by lower rate. 1 divided by lower rate is actually higher rate. So 1 divided by lower rate. 1 divided by 3.1380 is actually high rate. 1 divided by 3.1380. And correspondingly, if you can remember, it was 3.1575. Now it became 3.1380. Correspondingly, same number we are getting. So how much we get? 45.97 to 1.7775 into 1 by 3.1380. 26.0394. 26.0394. Okay, add 0.125% margin. Add margin 0.125 like the previous one. Why should we add? Because you're buying. When customer buys, he's at disadvantage position. Extend his disadvantage position. Buying even more higher rate, increase the margin. Increase by margin. 0.0325. So it becomes 0.0325 plus 26.0394, 26.0719. 26.0719. 26.0719. So the rate became 26.0719. So rate, what really happened? 25 to 26 means the rates have increased. So when the rates have increased, payable is more, it results in loss. So higher cost for the customer, higher expense for customer, that is loss. Which is calculated by difference 26.0719 minus 25.9806 multiplied by number of units, 25 lakh Singapore dollars. 25 lakh Singapore dollars. Two lakh 28,250. That is rupees. 2,28,250. It's a rupees because we have taken Singapore dollar 25 lakh. So when you apply the exchange rate, other currencies obtained. 2,28,250. In this problem, cover rate is not applicable because we are not thinking from the dealer point of view. We are thinking from customer point of view. Customer will not have any concept of cover rate. The cover rate is for buying and for selling. One for customer with you sell, in the market you buy. The difference is profit for the dealer, for intermediary. This for the customer. Only the rate, whatever he buys or whatever he sells. He does not do both. So cover rate don't apply for customer position. That's the heading I've given. Customer point of view. No question of cover rate. Cover rate comes only for dealers. Okay, I hope it is fine. Okay, let's go further. Okay, moving on to the next one. You, a foreign exchange dealer of your bank, are informed that your bank has sold a TT, a Copenhagen, for Danish kroner 10 lakh at the rate of Danish kroner 16.5150. You're required to cover the transaction either in London or in New York market. The rates are on the dates are under Mumbai, London, Mumbai, New York, London, Copenhagen, New York, Copenhagen. In which market will you cover the transaction? London or New York market? What will be the exchange profit or loss on the transaction? Ignore brokerage. Okay. So you are talking for a dealer of your bank. So problem is for dealer. Your bank has sold. I mean, let's say you have sold a TT to Danish kroner. So you have sold to customer. Your bank has sold. Let's say you have sold to customer. And which means you have to buy from the market. And what has been sold? Danish kroner 6.5150 at 10 lakh. So DKK at the rate of 6.5150. This has been sold. At what rate you are going to buy is what we need to do. That is DKK you need to buy. Right? This was sold and you need to buy now. At what rate? So what is this called as? Since you already sold, you have to buy now. You have to buy means it is going to be cover transaction. For the sale, you're covering yourself for the buy. And don't get confused. You are an exchange dealer of your bank and your bank has sold. That means you only sold. How is that? Bank has sold. Now bank has to come to you now. You are the dealer. So bank will buy from you. And where will you buy? You have to buy from the market. So much thing you don't worry. Your bank has sold means you only have sold. So keep it in similar terms. You get the answer faster. So just think like you are the dealer. You have to sell means you have to buy. And it is already sold at whatever the rate, 6.5150. It's already sold. Now you have to cover the transaction in two choices, in London or New York market. So cover rate, you have two choices. Either cover in London market or you cover in New York market. So basically through pounds you can cover or through dollars you can cover. So two choices you have. And which one we will select? When we have a choice, we select whichever is lower. We compute using both the rates and we select whichever is less. Because we have an alternative. Either I can choose this or we can choose this. But when they give you spread 65, 66, I don't have a choice. I have to buy at 66, sell at 65. That's the rule. But in one market, available 66. Other market, available at 67. Obviously, I go for this market. That's what they're talking about. In which market will you cover your transaction? In which markets will you cover your transaction? So we will calculate the rate from the London market. We'll calculate the rate from the New York market, and then we select whichever is lower. And it is going to be what? Buy. Hope we written down till here. Any doubts up to this point? Okay. So we have two choices now. Buy at London, cover at London, or buy at New York. If you cover from London, what is the pros going to be? What is the objective? Both objectives are same. Objective is buy DKK, because that is the cover transaction required for. And here also objective is buy DKK. Okay, so we have to start from INR. We have to end with DKK. Here also, we'll start from INR, end with DKK, because we need DKK. That's our objective. And in between that, buy at London means in between pounds will come, GBP. Buy at New York means in between you will have USD. Okay, so let's first fill up the first one, then we come to second. You are buying DKK, so ultimate objective is buy. So express all the transactions in buy terms. So here it's going to be buy DKK, and here it's going to be buy GBP. Okay, now buying at what rate? Obviously, GBP and INR. Look at GBP INR. GBP INR. Mumbai London. 1 pound equals 1 pound equals. So left hand side multiply and buying at a higher rate. So which rate we select? Straightforward multiply, higher rate 74.32. 74.32. Between GBP and DKK, between London and Copenhagen, it's like a flight you are taking. Mumbai to London, London to Copenhagen. London, Copenhagen. 1 pound is so much of DKK given. So pound is left hand side, GBP is left hand side, and DKK is right hand side. Okay, now we have DKK buying, and DKK is on which side? 1 pound equal to so much Danish krone. So we have to buy DKK, which is on right hand side. Buy DKK, right hand side. Therefore, we should divide. And we are still buying at a higher rate only. And which rate we are going to select here? Higher rate. But we are dividing. So 1 divided by lower rate, which is 11.42. 1 divided by 11.42. So what is the rate that is going to become? 74.32 into 1 by 11.42. 6.5079. For exchange rates and all, we take 4 decimals. 6.5079. Okay. Similarly, we'll come to it now for New York. INR to USD. Between INR to USD, Mumbai, New York. Left hand side is USD. Because $1 equal to so much of rupees. Dollar is left hand side. And we are multiplying because left hand side. Okay, here, sorry, I have to fill up the objective, the thing. Buy DKK, and here we have to buy USD. Can we present the same thing? Definitely you can. In fact, institute don't even show so much calculation. They don't even write this LHS, RHS because it's our method. So what you can do in exam, you don't have to write this LHS, RHS. If you want, you can write. If you're capable, you can directly write these amounts. Directly write 74.32, 1 by 11.42. That is directly you can write if you are able to do. Or if you want the process like the way I'm doing, you can write. So any way you want to present, that's accepted in exam as long as you get the answer right. That's what they want. Okay, so LHS we multiply and we are buying USD, so higher rate, and higher rate is 49.2625. 49.2625. And by DKK, USD DKK, last rate. DKK again, right hand side. LHS is USD. RHS is DKK. That is 1 USD equal to so much of DKK. Right hand side, we are buying DKK. Right hand side, divide higher rate. And higher rate means 1 divided by lower rate. That is 1 by 7.5670. So that becomes 49.2625, sorry, 49.2625 into 1 by 7.5670. 6.5102. $6.5102. Okay. Then which one we'll select now? We had two choices. Whichever is lower is going to be selected because we have a choice. So lower is beneficial. So which one? 6.5079. 6.5079 is recommended as cover rate. Because you can buy in both the markets. So buying in London is recommended. Cover transaction in London is cheaper, beneficial. And they not only asked which market to take, they also asked profit or loss. Not difference between these two, not the notional one, actual one. So we know it is sold at 6.5150. The buy rate, what we just identified now, 6.5079. So this is going to be 6.5079. So profit or loss to the bank. The sale rate 6.5150 minus buy rate 6.5079 multiplied by the number of units 10 lakhs DKK. $7,100. I think you get positive rupees. Rupees profit because we are multiplying for DKK. For a DKK, once we apply, we are going to get this. Solution answer, they have taken 7199, right? They have rounded off. Some decimal difference they would have got. Maybe they have taken more than 4 decimals maybe. But 7100 is what you get. That may be the round off part. Okay, so between 6.5079, 5102, 5079 is cheaper. And so 5150 is the sale rate, 5079 is the buy rate. Difference will be your profit, bank's profit. Okay, let's go further.